Hello, my name is Jody Samuels, and welcome to Week 13 of the FX Trader's Edge Trade of the Week series on the Forex market, featuring the Canadian dollar. Before we get started, keep your eyes open for our presentation next week for a special offer to join my FX Trader's Edge online trading advisory for a free month. And finally, I'm in the March 08 bonus issue of Stocks and Commodities magazine. Pick up your copy today, read my Forex Focus article entitled Finding the End of the Trend, and be sure to email me at jody@fxtradersedge.com if you like the article and want to learn more. And now, on to the US dollar Canada and some of its crosses. The Canadian dollar has stayed in a range for the last several months, and you can see this from the daily chart of the Canadian dollar. The breakout higher last week through the 10015 level caught a number of traders off guard as buyers came into the market and stop losses were triggered. The fundamental view at the time to drive the Canadian dollar lower was due to a weakening U.S. economy and the view that Canada will soon feel the effects of the slowdown in the U.S. Despite a rise in commodity prices, the Canadian still suffered. Based strictly on an Elliott Wave view, the Canadian should weaken further, perhaps towards the 104 to 105 level. Let's see what the hourly chart is showing us. The hourly chart is consolidating in a sideways pattern. You can see the sideways consolidation, and this looks like a continuation pattern, which when complete should break up to continue this sequence. So the hourly chart confirms what we're seeing on the daily chart. However, the US dollar is not the only currency traded against Canada. Let's look at the Canada yen and the Euro Canada as well to see if we have clues about the direction going forward. In this Canada yen 4-hour chart, yeah, it's very interesting, isn't it? Can you see the triangle setting up with its 5 legs? A, B, C, D, E. It's actually set up and it's ready to break down. It looks like a nice symmetrical triangle. So a triangle is a continuation pattern which should break lower in this case. So that would be a sell on the Canada yen or a weaker Canadian dollar. Now let's look at the Euro Canada. This is the daily chart for the Euro Canada. And look here. It's clearly bullish. That's not to say that it won't have a correction because markets never move straight up without correcting. However, it is a pretty bullish chart. The trend is up, which means a stronger euro and weaker Canadian dollar. Now let's see what we have. Let's summarize. To summarize, we have a stronger US dollar against the Canada, a weaker Canada yen, and a stronger Euro Canada. So all three currency pairs bode for a weaker Canadian dollar. As this exercise suggests, it's very important to look at the related cross currencies when analyzing a pair against the US dollar. Well, let's see what next week brings. And if you're interested in taking my Elliott Wave course offered through Trading Post, please check it out at tradingpostfinancial.com or fxtradersedge.com. This is the end of the Trade of the Week comment. Happy trading. See you next week.